Hey, welcome everybody. Here's a little quick follow-up of last night's event. The top trades for January. I think I already disclosed that we have currently on a 155, 145, 10 wide as it's considered, vertical bear put spread on, meaning we bought the 155 strike, we sold the 145 strike for the January expiration. We already have that trade on, looking for a dip in Microsoft. Netflix, we already have this. We did a ratio back spread, and today we took half the trade off. We bought it at around 225. We dumped it today at 650 on half the position. An incredible trade. That was one in Netflix that we put out for our trade members earlier this week. Now, as we get into January, I want to let you know short utilities I think is going to be a good theme. Long gold miners, GDX. Also, you can take exposure with the junior miners, which we are establishing to scale in right now, both by only a 1/3 basis. We started off at the beginning of the week. We'll look at it tomorrow and towards the end of the month. So this is not a scale in of getting the best price. It's a scale in over time type of strategy we're employing. Long energy XOP. I think I already disclosed we're already long XOP, and let me go into a couple items for you, what we are currently doing in our weekly newsletter. And you can just kind of get a quick gander. We were looking to add to Russell. We're already long Russell. We were looking to add it for this week. We never got the pullback, didn't get in. We are adding, we're in a third position of gold miners, and this is our scale-in approach. I'm looking to buy a third at a dip at 38.23. I'm looking to buy the final third if it even got down to 36.81. If it doesn't get down to those numbers, we add on a breakout. That's why scaling in, you get into some, and then you add later. We had a order to buy Wayfair on a pullback. We got filled at the first scale in at 83.88, and this stock has rocked about 5% since. What do we do with the other half that we didn't get filled on? We're going to wait to look for a breakout on a closing basis, on a weekly basis, to add to this. This could be a great trade, Wayfair, for a 2020 trade. Why? Home building off the charts, new home sales off the charts, existing home sales off the charts. I'm not saying millennials, I'm not saying baby boomers, I'm saying a lot of people do shopping online. Wayfair, one company that does an enormous amount of commerce and business with online retailing furniture. So we want exposure to Wayfair here. Our indicators look very positive right now for Wayfair, but we're not stupid either. We use risk management and we have some stops on. I want to be short the iShare Real Estate Investment Trust IYR. We're going to scale in there on any type of a rally during the holiday season. So we're looking at that. That's our current trades that we do. We put out what our stock is, or the ETF, where our entry is, our stops, our profit target, and what the hold date is I'm expecting for that move to happen. Last week, we entered an add-on position in XOP, so we're in a full position XOP from a great position. Like I just mentioned, we entered a third position in gold miners. We took profits on Region Financial. We've been in it for a while. So anyway, our current positions coming into last night's webinar that I wanted to go over with you guys was real briefly. We have a long-term April, and all of these trades I kind of put out there on our YouTube video channel anyway. So you know we're long Nordstrom stock. We took the cash out and we applied the profits and put it towards an option strategy, an April 40/50, and I think we only paid $2.50 for that. We have the Russell. We're in a 159, 166 bull call spread, and that is a 7 wide. That trade's doing quite well, obviously. We bought the 24 strike call in the XOP, the 22 strike call in XOP. We bought the XOP itself, so we're in that. ConocoPhillips, long Kellogg's, Wells Fargo, but Wells Fargo is not doing great. We're in at 53.35. It's not doing bad. It's not doing great. When it rallied about to near that 155, what we did, because we thought we might be in a little bit of, stall pattern here as we got into the option expiration in the New Year's, we did a ratio collar strategy, but we added a twist. We sold the 55, took in the premium, and bought twice as many of the 50 puts. Now, if it just sits here and doesn't do anything, all I'm simply going to do is buy back the short side of the collar, which is the short 55 call. I mean, the theta decay alone is already reduced the premium in half. So we've got a profit on that side of the option strategy while we're like pretty much break even on the stock. Anyway, that's another lesson for another day. But here's what we're really looking at as we move forward. I've been just kind of putting our money where our mouth is, and I was telling you that we want to be long XOP, and I think this chart may explain it all. Where should money work in different phases of economic cycles? If you're in a recession, you buy staples and utilities. If you're in early expansion, you want to be in technology, financials, transportation. If you're in expansion to middle to late expansion, you still want to be in technology, you still want to be in financials, transportation, Dow theorist, right? And then more importantly, energy right there, and basic materials. So I think the miners, gold miners, and basic material and energy is where we want to be. All right, what about the end of this rally, or how much is left of this rally? Can we anticipate in the equity markets? Because after all, in the prior slide, you notice I said I'm looking for a market correction in the spider. Next slide, please. Well, before we get into the spiders, just let me point out why I'm hot and bothered about the energy. Not only do we have a business cycle expansion that suggests we should be in energy, but we have a decoupling effect. I went over this last night, and a couple of people had some questions. What do you mean decoupling? When crude oil prices go up and the sector ETFs go down, that's a separation. And normally, when you see crude oil go up, the sectors go up with it. When crude oil goes down, the sectors go down. But something weird has been going on since approximately September, whereas crude oil has gone up and the sector's gone down. That's decoupling. All throughout history, you could clearly see how the trend with crude oil and the OIH and XOP have almost mirrored each other, right? I mean, it's pretty uncanny, and this goes back quite some time, right? So anyway, what I was part of the work that I do, besides looking at relative strength and spreads, this is kind of a good indication that there is separation. And as I said last night's video and trading class, I said, guys, one or two things have to happen. Crude's got to go down, or this is going to go up, and we believe that this is going to go up. And then today, what's going on? Crude oil is over 61 a barrel. Okay, so let's move forward. What else is going on? Think of this. In December 2000, I got this, I dusted this one off, right? In 2002, this is interesting. Hey, Mark, if you're still watching, you had asked me a long time ago, do I still follow my 11-week cycle? 11 is a Fibonacci ratio number, not in itself, but if you take the counting series of Fibonacci, 0 and 1 is 1, 1 and 1 is 2, 2 and 1 is 3, 3 and 2 is 5, 5 and 3 is 8. Okay, so the continuous series of cycle numbers. You'd say, John, there is no 11. I'd say you're right, but there is, if you go out in time, 55. And what is 11 weeks? 55 trading days. It's kind of a coincident factor, but we do see that there is something that I wrote about way back December of 2002. I wrote this article on how to combine cycles and pivot point analysis. So, I mean, I've been in this business a long time, and we've done a lot of things. This was one of the big cover stories of Futures Magazine, the premier industry trading magazine back in the day. That's another destructive innovation that's taken place in our trading industry. No more floor trading and no more industry magazines, right? So with that stated, what about the 11-week cycle? Is it still valid? Well, here's an interesting component. When I wrote this article, friends, it was released here. Now, if you look at these blue lines, that is the 11-week cycle finder that we used way back in the old days, right? And so it's kind of interesting. We had in 2000 the actual cycle high. A cycle high, market went down. A cycle high, market went down. A cycle high, market went down. A high, down. I mean, the list just goes on and on and on. A cycle high, market went down. A cycle high didn't really do much. Cycle high, market plunged after that, right? Cycle high was due date, and the market went down. So you'd see that not all the cycles work, but boy, more times than not on this chart, you'd want to pay attention to the 11-week cycle. All right, let's fast forward. What is the 11-week cycle saying for right now? I bet you want to know about that. All right, I just fast forwarded and I went through time on the sliding scale over here from all the way back in time in history. And as you can see, we got the cycle finder. We go all the way back to the present day. And so let's take a look at this. The 11-week cycle, I haven't talked about it. Now, during the course of the year, we have mentioned this in our weekly analysis. Is it still in effect? Gee, that's kind of an important cycle high. It didn't really work here, even though the market moved sideways for about 3 weeks. It didn't really efficiently work here, but boy, it came to play right there. It came to play right there. It sort of came to play right here because the market did go down. It really worked out here. It super duper worked out there. It didn't quite work here. Market paused. It had already had a little mini pullback, but the next one due right at the beginning of January. So I would have to tell you, from a timing perspective that has worked more times than not on average throughout history, we definitely want to pay attention to the cycle finder here. And that is coming in the first week. And this is an interesting concept too, because now we have an 11-week cycle, which is part of the work that I wrote about, oh my gosh, 18, 20 years ago, right? So the whole 18-week cycle, if you hear about it, this was something that I discovered. This is something that was published with the work that I've done combining that and pivots. So how does it work? It worked then, and it's worked throughout history, and here's how I'm telling you, you need to pay attention to it right now. We are at and exceeded a longer-term pivot resistance, and we are weeks away in the holiday from an 11-week cycle high event. More importantly, we are at a seasonal time frame where we see the market typically peak out. So we have a timing effect that is giving us a double whammy. And then from a technical perspective, we've had a massive run up in the market since March of this year. And the McClellan oscillator on a weekly basis is in a divergent formation, meaning as even aggressively as the markets moved up, the McClellan oscillator is not making higher high momentum readings. It's actually making lower high momentum readings, which means when this bad boy turns around, it's going to be ugly, thus the call for a potential 4 to 8% correction. Will it come? I'm not sure, but you better be aware that we have many coincidental factors at play right now that elevate and heighten the awareness factor and the warning. So what we said yesterday is that, number one, we want to take advantage of a couple things. If you use Person's pivots, what I would be, and the PPS indicator, what I'd be expressly nervous or be more aggressive about is if we finally get a sell signal, a PPS sell signal, which we don't have a weekly sell signal, A. B, if we get a weekly sell signal and a close below weekly pivot, that's a bad sign. When a market runs up, the blue line, the weekly pivot, Person's pivot's been acting as support, and when it breaks below, you see sell-off. And then now we've been seeing this kind of like higher high, higher kind of low concept here. There's lower lows right there. My guess is when this market runs out of steam, you're going to get a situation which is going to be a weekly close below weekly pivot. Not good. You can actually see a daily close below weekly pivot, and that would even give you maybe a shorter term horizon heads up. So while Christmas is next week, option expirations this week, markets up, I'd be very leery and be very careful about maybe looking for a January sell-off because the timing indicators, seasonality, and things are lining up. And then that's what we were talking about yesterday. So if you joined me last night, you saw this comment. Look for an uptick in ATR with a weekly PPS sell signal and look for closes below pivot. It may develop into 4 to 8% pullback. So I just wanted to supply you with some more information about that and follow up with you as far as what to expect and what the conditions are that I would say merit establishing a hedge or a short position. Our top trades for the quarter, we went through lightning fast what I'm looking for, and I just wanted to reemphasize that, as well as what we're doing in January to help traders. And this was something that I think everyone should take advantage of and be a part of. It's going to be an unbelievable event, one in which I think is probably my greatest coup d'etat work that I've ever done for retail traders. This is going to be a building strategy session, and we're going to look at our trade station optimizing function and build for the S&Ps a long only, a short only, and a both long and short strategy. Now, everyone that takes place that has the trade station will get this workspace, number one, once we have all the optimization functions filled in. And then again, if you don't have trade station, Thinkorswim clients, we're going to be able to help you put this together in Thinkorswim. So what are we looking at? We'll be optimizing holding times. We'll be optimizing what our risk reward ratios are. We're going to be optimizing what our types of stops should be, whether it's my LCC, my dynamic, or my compression, combining time with LCC and using a function of average true range, ATRs to start right there. So we'll explain all of that in this 2-day function. So day one is strategy building, optimizing our SPY system together. Again, Thinkorswim users, we're going to build a trading page so that you have the right time frames, the PPS, on balance volume, PMC indicator, and again, we're going to create this page for the right person's pivot combination. So that's something that you don't have to go and do yourself. We'll have that, and I think there's a function that we can actually share this with you guys, and so we have it all built together. So that's day one. And then finally, on day two, we're going to work through actionable techniques to improve your mental fitness. Now, this is a very, very important subject matter, and I know that a lot of us don't really take this as serious as we should, but I want you to understand something. Trading, it's not just emotional, it's physical. Physiological changes happen through us, and you need to be prepared, and that's what I'm going to help you do. So do absolutely consider our Christmas special. This is an $895 2-day class, $318, special tuition, expires 12/31. Sign up, take advantage. I look forward to you being a part of my trading community and my student so I can help you navigate what I think is going to be one whale of an exciting year in 2020. It's an election year. It's got all kinds of things. We got the Federal Reserve saying that we don't mind seeing an expansion in inflation. My Lord, friends, it's going to be something here for everyone. Do take part. It could be probably one of the greatest trading years I've ever seen, and I really haven't been this excited about the markets in a long time. I think we have a commodity cycle surge that is going to be epic. So please join us, be prepared, and get the right education in your side. Thanks for listening, and I hope you found value out of my cycle analysis that I've been famously sharing for almost 2 decades now. Thanks again, everyone.